Yeah, markets were weak in December again, so you've seen a continued fall in equity markets. The small cap and micro cap end of the markets has been particularly weak, and I think that's on the back of a pretty soft economy. So you've seen a real weakening in house prices, and you've seen the follow-on effect on consumer spend, and you've seen the actual liquidity in the small and micro cap market dry up to a degree. But that's created opportunities. So what we're finding is that there's good companies in that space that have been dragged down and aren't as sensitive to the economy, and that's where we're trying to invest. So we're finding companies in that space that are really defensive in terms of their earnings and are now trading at very cheap multiples. Yeah, we've taken a long-term position in Navitas, and we took that position a couple of years ago. So we bought it on a downswing in the share price. So they lost a contract. Actually, they lost 2 contracts, and that had a real impact on their earnings forecasts. But we saw the opportunity in the business. They have 35 pathways programs across the business, and they're the biggest player in the market globally. And that was actually the opportunity for us to actually buy in pretty cheaply into Navitas. So we bought in the low 4s. It was subject to a takeover late last year at $5.50. It was a highly conditional bid. And what we've seen recently is that bidder has actually increased the price they're going to pay. So they've increased to over $5.80. And they've also freed it of some of the onerous conditions, such that there could be an interloper that comes over the top and has another crack at Navitas. So we still like the company. We think it's still relatively cheap, and we think there's the potential for another player to come in and increase that takeover price. Look, despite the economy being soft, we think there's valuation opportunity in the market. So as I said before, there's good companies that are trading very cheaply now, and some of those earning streams are quite defensive. So we're positioning in those companies. We think you'll see continued takeover activity. So what we saw with Navitas late in the year, and also Healthscope is another company that we own that was also subject to takeover. More recently, we've seen Healius under takeover. So Healius was primary healthcare, and they're a big healthcare business in the Australian market. So they've seen a takeover as well. So we think there'll be continued M&A through the first half of the year, and then we'll see if we can recycle some of that cash into some of the more cyclical names as they get cheaper. If you want more information on Spheria Emerging Companies Limited, please visit our website at spheria.com.au. It also has further insights into Spheria, videos and commentaries that may be useful. Thank you very much for joining us today.